What's going on, everybody? Welcome back to my YouTube channel. Today, I want to share the three most powerful entry. No, I'm joking. I just want to share with you on this lesson how you can take these buys, trade in a single candle. That is it. Nothing complicated. Just simple candle deviation theory entries using a single candle. If you're new to my channel, that is what I trade, a single candle. If you're not new to my channel, then you're going to enjoy this because, and if you are new to my channel, you should enjoy this as well, because everyone talks about patterns, candle formations, this, that, and whatever else. And I'm here to tell you today, on this date, when you watch it, on the 8th of November, 2025, this is about to change your life. Process over patterns is way more powerful, consistent, and realistic in this business. If you are looking for perfect patterns, you've already lost. If you are looking for perfect candle formations, you have already lost. Disclaimer, they do work. I'm just saying, in order to build that consistency, you want to have a process over pattern system, meaning you want to understand why you take every trade you take every single time without fail. So the stories and the narratives that you conjure up when you sit down to trade, stand up or lay down, however you do it, is going to impact your results majorly long term. Short term, you may be able to take a perfect pattern and get good results. Long term, you will not. Why? Because the markets are dynamic, they are constantly changing, and nothing stays the same. So you might be saying, well, then how does this work all of the time? Well, here it is. A candle has to close bullish or bearish every single day without fail. And if you understand how to manipulate the range of a single candle's movement using lower time frame structures, then you just cannot, well, you can fail. Okay, let's get on with it. So first things first, when I'm studying the markets, all I need to understand is where is the next candle going to go. I'm going to break the internet with this. Probably get 2,500 views. Anyway, I'm going to share with you. Sorry, I'm not. I've already said that. All I need to ask myself is where is the next candle going to be, going to go? So when I look at the previous hourly candle close at 9 o'clock, it closed bearish. Now, under no circumstances can I ever assume because it's closed bearish that the next candle will be bullish. Now, there are small intricacies and little nuances that I can look at here from an hourly perspective and understand why the next candle will be bullish, even though we cannot assume it will be bullish until the process and the story comes together. Okay, so that being said, looking at the 1 minute time frame, let's do this again because for some reason it just whatever. I can clearly see when the new hourly candle opens. So anything beyond this red line to the left is this previous data. Okay, probably from what you can see in the screen is just this candle alone. Anything to the right is this blue candle here that I'm trying to help you to see how you can enter this with a perfect process. Perfect process, disclaimer, doesn't mean you can't lose. It just means it's a perfect process you can use every single time. All right. So what I'm looking for here is behavior shifts. The first behavior shift that I want to see in the market is, does price attempt to go bearish? In this instance, you can see when the candle opens, the first move in the market was top wick, which means price created a top wick on an hourly and then went bearish. Now, is that enough for me to sell it? No, I'm not going to sell it for the reasons that I'm not going to go into today. I'm going to show you the reasons why we can buy it. But immediately after price created a top wick flip bearish, you can see we had a massive impulsive move to the upside. So if you look over to the left on the hourly time frame, you can see that price created a bottom wick, flip bullish, and now is maintaining a bullish sentiment. In theory, what this means is that once the candle is bullish, it is highly likely to continue bullish. That is a belief system that you want to strengthen if you're going to trade the candle deviation theory. Whether it be one candle deviation theory or two candle deviation theory. In this instance, it's one. But the belief system is that once the candle flips bullish, it will continue to drive bullish. So that being said, price pushes bullish. Now, I can't enter the trade. There is no story here that makes sense. So what I have to wait for is for it to make sense. Now we continue to push bullish. But at this moment in time now, in the live markets, I'm saying to myself, it's bullish. It'll close bullish. I didn't get an entry, so I'm walking away. And or I'm going to sit and wait for it to develop something for me so that I can enter the trade. That's not a good thing. But I just need to show you how you do this in the live markets if this developed. Hey, and for those who are saying, this is hindsight, Rocks. This is... Shut up. Just shut up, please. Give me a damn break. I could show you right now, just from this week alone, hundreds, and I mean hundreds and hundreds of conversations where those within NDS are trading the exact same concept that I'm talking about today, and we all align. But I'm not going to show you. But I wouldn't make the claim that I could show you hundreds and hundreds of screenshots showing the alignment. Please stop with the hindsight. We just trade a candle, my friends, okay? We just trade a single candle. It's not that deep. Okay, let's get back to the lesson. So moving forward, prices push bullish. And yeah, I mean, it's just bullish. So let me just mark here on the hourly time frame where the candle flips bullish. In order for us to enter this trade, we are going to truly need price to come back to the open. You never want to buy the market up here. You've lost way too much range. I don't care what the pattern looks like. You've lost too much range. Okay? So I'm going to patiently wait, if I am going to wait for this trade, for price to come back to where the open is. Now, there's a few ways that you can look at this, but I want to really try and keep it as simple as possible for those who are still getting to grips with the system, is that once price is bullish, it closes bullish. If it fails to maintain that bullish sentiment, it is depleting, meaning there is a higher chance that the bears will take over. Now, a higher chance plus the confluence of the previous hourly candle closing bearish means that we have a higher probability trading setup. So you have the depletion of the bullish sentiment. You'll now have evidence of the bears stepping into the market. And you also have the confluence of the previous hourly candle closing bearish. And there was no reason for this candle to go bullish. So in theory, if you get a pattern now to sell it, then it is viable. There isn't a pattern here at all. But moving forward, so we could be processing the ideas of sales now. So how do we invalidate the ideas of sales so we can confidently get into the buying opportunities? Well, first, we need price to get back to the open, which it has. And then what we need to see price do is show us patterns, again, of price failing to continue bearish. So in this instance, what we're starting to see is when the candle opened, it created a bottom wick. It flew bullish, failed to maintain a bullish sentiment, however, has come back to an area in the market where it has failed to go down, respected that on two occasions. Above the red line, the hourly candle is bullish. And now what we can anticipate that if we get a pattern, that once it is bullish, it will continue to drive bullish. So in the live markets, we're sitting patiently. We're looking for price to give us an illustration that we are now ending this downtrend. So the downtrend that I am pointing out to you is this. And we have an illustration of a new uptrend. Just laughing at myself. I think of somebody sitting here saying this is Elliott Waves Rocks. The downtrend ending and the new uptrend starting. Okay, so again, we see price coming into this area. We can see price continue to support this area. And now what we're looking for is the deviation. So a deviation is simply price shifting from being bearish to bullish. And how do we identify that? It's simple maths, guys. It's simple maths. It's just simply price creating a higher low formation. That is it. Higher low formation with a confluence that if you look to the left on the hourly that the candle was currently bullish, with the confluence of price failing to break the structural low after we've seen the depletion of the bullish sentiment, meaning bears should take over. The confluence of the previous candle closing bearish, meaning the next candle will be bearish, but failing. Now we deviate bullish. So what does that mean? Well, we have an indication in the market that if price continues to drive up from this point, then there's a much higher chance that price can continue bullish. Okay? Everybody get this? Everybody understand this? I'm not going to go over it. You can rewind it. We have price failing to break. I'm not going to go over it. You can rewind it, but I'm just going to repeat myself again. Price failing to break. Previous candle bearish. Failing to maintain that bearish sentiment. Confluence of bullish, depleting that bullish sentiment, but failing to maintain that bearish sentiment. And then we have a downtrend making lower lows and lower highs, which we never sell in. And now we have the market failing to break with a deviation higher, meaning that once price breaks above this red line, the candle is truly bullish, and the belief system it will continue to drive bullish. It's just beautiful. It's just beautiful. This video has gone on too long. I'm not going to be able to do the other entries. Okay, I'll do more in the future, but this I could probably run through them quickly. Oh, it's too beautiful. Rocks, this is hindsight. No, it's not. It's not hindsight. And yes, I mean this is wild. This doesn't usually happen in terms of one candle, but this is not hindsight. I promise. From the bottom of my heart, I promise it's not. I could show you hundreds and hundreds of screenshots just from this week alone of conversations within NDS where we have all been aligned and taken these trades because the process is more important than the pattern. And we trade one single candle. Oh, it's beautiful. It's just beautiful. Anyway, let me move on very quickly. Otherwise, this video end up being 30 minutes and people start falling asleep. How do we enter this trade? Let's get to it. Let's select bar here. Let me just move through it very quickly. And yeah, let's just move through it very quickly. Okay, so while I'm doing this, I'm going to talk about this with you. The previous candle has closed bullish, correct? What do we anticipate the next candle to do? Continue bullish. Is there any reason for us not to believe the next candle will be bullish? No, because once price pushes bullish and we create this U shape, that means from this point with the butt bodies, with this range back to the high in terms of the U shape, let me draw it in for you. U shape. Butt bodies. This is just structure, guys. This is how the market moves. Price is going to come back to these highs more often than not. Did it? Well, yeah, obviously. Okay, so let me do this and run through this very quickly. Oh, by the way, this is called an inside bar entry because more often than not, you want to enter your trades on the break of the high. That validates the uptrend because price makes a low, higher, higher high once it breaks the high. But this is called an inside bar entry. All right. Anyway, so previous candle closed bullish, next candle bullish, and let's see how we enter this trade. Now, we never enter in an uptrend. This is a higher low. You cannot enter on the break. It's that simple. Okay, price breaks the high. You cannot enter on these highs, even if the candle is bullish, because price more than likely will pull back to give you a deeper pullback. So no entries. Now, what we have here is what we call an invalidation of the uptrend, a reset with the idea that now if price is going to create a lower high, we continue bearish. But if we fail to break the lows and we create a higher low, it's just simple trend trading, my friends. It will continue bullish. And let's mark this up again. This is where the candle flips bullish. And as long as we get an entry on the break of the high, then it is a trading opportunity because the belief system is once the candle is bullish, price will continue bullish. Okay, Bob's your uncle. So back to this again because it just keeps resetting. We have an invalidation, a reset of the structure on the 1 minute. And what we're looking for now is for price to give us a sign that we can now create a potential lower high to go low on the break of the low, which fails. So now we are looking for a deviation bullish in order to see price continue higher on the break of the high. Okay? Simple maths. Now, some of you might say, Rocks, this is hard. No, I'm not going to go into that again. I can show you hundreds and hundreds. I mean it, hundreds and hundreds of screenshots this week. Right. So anyway, so what do we see here? We see a continual pattern. So we have the trend that was bullish that has been invalidated. We had a lower high that never broke the low. And now we have a continual pattern, a continual pattern. If price breaks this high, this is where, look on to the left, this is where the Audi candle flips bullish. And the belief system is once it is bullish, then price will continue bullish. It's, it's not that deep. Okay. It's not that deep. And I'm not going to talk about targets and every management. I'm just talking about the process right now. It is a story you can tell yourself every single time without being wrong every single time, as long as you follow these stories. Just no one can deny, debate with me, argue with me, question me, get me to even want to entertain the idea that a candle can't close bullish or bearish. Okay? Continual pattern. Once price breaks above this high, the candle is bullish. What are the confluences? Previous hourly bullish. Next candle will be bullish. We cannot enter in an uptrend, so we need an invalidation and a reset. We have a continual pattern. We need the entry and the break of the high because the hourly candle is bullish. Once it is bullish, it will do what? Close bullish. There you go. Bob's your uncle and... No, we're not allowed to say the last part. That is it. Guy, I'm not even going to go into the last entry. Like, I'm just not. If you enjoyed this video, everybody, do me a big favor and hit the like button. Oops, I've gone. Let me come back. If you enjoyed the video, everybody, do me a big favor, hit the like button, subscribe, turn on notifications, and until next time, as I always say, continue to trust the process.